We have housing starts coming up later today. What are you expecting? What do you think that means for people who are invested in the housing market?
Great question. We have actually been seeing a fundamental undersupply of housing within this country. And a part of that really is driven by what happened in the GFC and sentiment for building coming out of it. And so hopefully we are working towards meeting that undersupply in the coming years. But at the same time, builders are still dealing with a lot of shortages, whether it relates to materials, whether it relates to labor, inflation. So a lot of different factors really compounding the supply issue that we have from a housing perspective across the country today.
So we've been saying this word all throughout the show: inflation, inflation, inflation. CPI and PPI better than expected last week. I covered transports. Freight numbers a little bit better than expected, showing some relief. One area we're not seeing any relief is housing, and often considered the stickiest part of inflation. Very rarely does your landlord say, you know what, I'm just going to reduce that rent. Don't worry about it. How does that shape your view of investing in the housing market where, some of that other inflation, it may actually be transitory, may actually work out that way, but housing very rarely is?
Great question. We invest here at Center Square in rental residential, and we're still seeing those rental rates continuing to increase, just as you mentioned, right? We have a really strong labor market currently still within this country, which is giving landlords that pricing power, the ability to continue to charge those rents across the country. We're seeing some phenomenal rent growth in a lot of different markets. Part of that is a bit of a recovery that's happening in some of those urban core markets in, call it California, New York City. Some of that is more of that recovery play. But across some of the markets in the Southeast, the Southwest, where we saw rental rates really, really increase throughout the pandemic, they're still continuing to increase on top of that, right? And so we're going to continue to see that part of inflation remain relatively elevated, even as we see some other parts starting to moderate now.
All right, well, you got some stock picks for us. And according to you, it's all about location, location, location. Among your picks is Avalon Bay. That's an apartment. Is that a REIT? I don't know. It's a stock that generally deals with apartments in coastal areas like the West Coast and the East Coast, equity residential and UDR. Why these rental plays in particular?
Like I mentioned, a lot of these coastal markets where these companies have portfolios are seeing a confluence of several different factors right now that are giving them some fantastic pricing power and seeing a lot of rental rate growth. So part of that, a little bit of it is a recovery in some of those markets, but a lot of it really is, like I mentioned, a structural undersupply of housing in their markets. And so you're seeing great population growth. You're seeing those millennials looking at, more housing options. You're starting to see those college graduates that maybe during COVID didn't actually move to where they were working, now are moving there. So you're seeing this resurgence of these coastal urban markets where all three of these companies have really fantastic portfolios. We're anticipating fantastic revenue and income growth out of these portfolios, not only this year, but also continuing into next year. And so residential housing actually provides a great inflation hedge for investors that are looking for something in a potentially, downturn as we think about what's coming in the economy in a couple months.
Yeah, you're also looking at another part of real estate that we don't talk that often about here on CNBC, but it's obviously a big part of the economy. Supply chain, e-commerce, what's it called? Like industrial properties. I had to search for the word there for a second. It's still early. Some of the names you're looking at are Prologis. And can you kind of give us some of your other picks when it comes to this space and why you're so bullish in this space?
So like you mentioned, it's an important part of what's happening here in the U.S. Over the last 30 years, we've been looking at globalization, right? So what happens when we're really expanding these supply chains globally? In the last few years, we've kind of seen that start to track backwards from a deglobalization perspective. And our supply chain is just fundamentally underbuilt to really service what consumers here today need, especially in the context of e-commerce growth doing what it is. And so you mentioned Prologis. Another great name that we really like here is Rexford Industrial. Rexford Industrial really owns those supply chain hubs within Southern California, really close to two ports that account for 40% of imports coming into the U.S., really close to a massive consumer base there in Southern California and facilitating last mile delivery of a lot of those e-commerce orders.